Hey everybody, I'm Charting Man Dan with the Chart Guys. This is number 10 video in our long-term pattern series going over the last 2.5 years. We're going to look in at the broader market, some individual names, some lessons, how we can apply these long-term time frames to our trading game plans and investing game plans. Let's take it from there. Learn how to trade stocks, crypto, and hype sectors with a global chat room led by professional traders, as well as daily live streams at chartguys.com. Okay, first things first. This is a series that we are now doing every quarter. After every 3 months, we check in and see where we stand, and that is important because we need continuity. We need to see how these setups and patterns play out as we go along, because that's how we learn and then apply what we learn to future price action and trade game plans. So we've got a playlist on our YouTube channel, and at the end of every stream, I just rename them. But we've got 1 through 9 numbered, and today is number 10. So posting that link now, and make sure and check it out. Just a little note on the differences. Number 8 was more of an educational aspect in terms of how the different time frames align with each other and how it's essentially stuff that I'm not going to cover every time. But again, everybody should be watching all of these videos as just a course almost, in terms of even investors. This is just the way to be approaching markets, more so investors than traders really. But okay, one more thing. If you click the link to sign up with your email, you will be emailed a review of this video. This is an example of the last one where we use AI to summarize what we look at, the setup, the different conditions, and also we're going to send you ebook and information and things about long-term trading, long-term patterns, the different time frames and things like that. So free, click that, email, summary, and additional ebook and information. Okay, enough of that junk. And now we go to the meat. So last time we checked in, and I've got my little handy dandy notes here. Before I do every one of these streams, I watched the last one just to see where we stood, what we were talking about. And we obviously were, at that point, we had set the Trump tariff lows. We were a couple of months into the bounce, and we were testing, we actually had already hit all-time highs. From 2 videos ago to last video, SPY was up like $100. And now from last video to this video, SPY is up $45. So obviously we are in a melt up euphoria mode. The bulls are in absolute complete control to the point where we haven't confirmed a daily downtrend in over 5 months. With where we stand right now, the next time we see normal, healthy monthly consolidation, because again, we can pull back a lot and still set a monthly high or low, it's going to feel brutal. Even a pullback to monthly EMA 12 would feel like a big deal, even though it's healthy, normal consolidation. A back test to the previous all-time high. That's a 6% pullback. So just, again, I just remind you that so that we can mentally prepare that eventually we're going to be down 5% plus from the all-time highs. It's going to feel like a top, but we're going to be looking for monthly higher lows, and we have to keep that in the back of our mind. Now, blow off top. We did a webinar, and look, Google Chart Guys blow off top, leading into, this is where we did the blow off top, somewhere here, and the Trump tariff dump reset things for me in terms of cooled everything off, and now we're starting to get back towards a blow off top kind of scenario where, if we head up 7,000 plus in the S&P 500, I'm going to be starting to take profit in my no-touch long-term positions in the S&P 500. I was buying it during the CVID dump. I was buying it during the 2022 bear market. I will be scaling out into euphoria if we reach 7,000 plus before we start monthly consolidation. Because at that point, that'll just be too euphoric for me. So that's my mental, break point, where it doesn't mean I'm just going to exit when we hit that. That opens the door. If we get there, I am now open to selling some long-term positions. Otherwise, I'm just going to keep taking it one day at a time. But the guide for the broader market, depending on your time frame, is the 3-month EMA 12, or the 3-month uptrend, I should say, just because we've been holding a 3-month uptrend at this point since the CVID lows, and nothing long-term is going to change as long as we're setting 3-month higher lows with every pullback. So I'm on the daily time frame right now. Eventually I'll zoom out and I'll watch for a weekly higher low. Eventually I'll zoom out and watch for a monthly higher low, but it's just full steam ahead for the bulls. And we're in a market environment right now where it's just a game of rotation, where NVDA leads the way up for semiconductors. MU is doing nothing. MU gets a huge leg up and plays laggard catch up. While it's doing that, AMD is consolidating. AMD gets rotation. Big break today. So I'm viewing it as a rotation market, both intra and inter-sector, meaning you got the tech sector names. Okay, Meta leads the way up. Apple and Google are doing nothing. Google gets a huge catch-up move to all-time highs. Apple gets a move to all-time highs. Amazon's not really doing a whole lot. Watch for rotation into Amazon. And then, of course, between sectors, are we going to see profit taking in semiconductors head into healthcare? Healthcare has been weak. We'll talk about healthcare in just a bit. Are we about to see rotation in Q4 into healthcare? So that's something we're going to be watching for as well. Before I forget, please like this video, because the more people that view it and like it, the more I'm motivated to do it. All right, so the S&P 500 and the NASDAQ are the same thing. Monthly stair-step pattern, a higher low every single month. And the current move that we are in is reminding me of the move that we saw from October 2023, where this straight up for months. Let's go to the monthly. At that point in time, it was a monthly stair-step move to all-time highs. It was a higher low every month, 5 months in a row. So now we have a higher low every month. We just did 5 months in a row. And so that's an easy guide. If we're setting a higher low every single month, nothing changes. So all this said, yes, we're euphoric. It's a rotational market where you're scouting laggards to get money rotation. There are no red flags whatsoever, but we know that when we feel this kind of euphoria, that we need to be a little bit cautious. Maybe you're scaling out some positions. Maybe you're grabbing a little bit of a hedge. Whatever makes you feel comfortable. You know, I've grabbed a little hedge here and there, and then I stop out. I've definitely trimmed some positions, but then I'm buying other positions. You know, just a quick example, taking profit in something like IONQ, entered IONQ somewhere back here, definitely taking profit into that blue sky breakout move. But then I look at something like CRCL, and I'm looking at the long-term chart here, and my trade thesis on a CRCL swing was look for a monthly higher low. A monthly equilibrium is the most likely scenario after the recent IPO. And so we just today set a monthly higher low. So you don't have to be chasing everything. You know, I don't have to buy NVDA up at all-time highs if you're not comfortable doing so. There are other places, and that's what I'm talking about in terms of looking for rotation. We're going to be talking about potential rotation back into crypto, maybe out of metals and into crypto here in October. We'll talk about that in just a moment. But, you know, something that looks like CRCL, you know, we're not extended. I'm not chasing this move. I'm just looking for that monthly higher low. So that's how I'm personally currently approaching any new long swing trades that I take. So in the other videos, we also always have been covering the metals. I talked about in the last video how I'm not comfortable longing gold until we see monthly consolidation. And we saw monthly consolidation in the sense that we went sideways, but it's still a monthly stair step. It's a higher low every single month for the last 10 months in a row. So I didn't add any gold, but I've got a fat silver position. And 2 videos ago, 6 months ago, my thesis was I think silver is gonna play a laggard catch-up move to gold. And if you look at XAU divided by XAG, for the last 6 months, it's been red, which is showing us silver has been getting its big catch-up move. And so silver is now approaching all-time highs. We just got within maybe 4% of all-time highs. And my guide is for gold, it's been weekly EMA 12 the entire year. We're going to talk about EMA 12 riders. I'm going to do a whole webinar about them specifically later this month. But if you've been following our weekly videos, you've heard me say 100 times, if weekly EMA 12 is support, the bulls have complete control. And gold has just been holding it to perfection. And then we got another big leg up, and we're going to top out eventually, maybe soon, and we're going to pull back, and we're going to test weekly EMA 12 again, and we'll see if we hold it again. And if you want to keep it simple, that's it. The weekly EMA 12 or monthly stair step. Very often, a stair step will have a shorter term EMA 12 rider. When I'm day trading, a 5-minute stair step straight up is riding 1-minute EMA 12 support. And so that's what's happening with the weekly and monthly in gold. And you could say, I'm bullish gold until we lose the pattern of a higher low every month, which has been intact. I mean, it's really an astounding run where we've set a higher low every single month, 18 of the last 19 months. This is one for the record books. But I'm watching, number one, do we top out? If we do, we're just going to look to test weekly EMA 12. Silver's been holding it as well. But there's been an inverse relationship when you're zoomed out between crypto and gold over the last couple of years, where when gold's going straight up, generally crypto is sideways, Bitcoin is sideways, and then gold starts consolidating, and then Bitcoin goes straight up. It's been a very regimented tag team move where they're just taking turns. And so I'm watching, Bitcoin, as we know, has been trading sideways. We just had a weekly equilibrium break bull, but we were within a tightening range for months. This is months of sideways. While that's happening, gold is straight up. And so now Bitcoin certainly looks like all-time highs are coming. Whether we see daily consolidation first, that's always a possibility. But as soon as this equilibrium breaks bull, the probabilities that an all-time high is coming increase significantly. Maybe if I'm 50-50 in this equilibrium and then it breaks bull, now I'm 80-20 that an all-time high is coming. And so we have very limited resistance here, and we're just looking up at 124.5. We know bigger picture, it's the monthly EMA 12 rider that is our full bull control on Bitcoin. During this period of consolidation, gold was going straight up. We hold monthly EMA 12, gold goes sideways, Bitcoin goes straight up. Bitcoin pulls back, gold goes straight up. You get the idea. It's just been a very clear inverse relationship. And so my mindset is I'm not even going to consider a cycle top being in for Bitcoin if monthly EMA 12 is support. Really, losing monthly EMA 12 will be the first sign that a top is in. It won't mean the top is in. It'll just, again, the probability needle. What's the probability that a long-term cycle top is in? If monthly EMA 12 is support, the needle's down here. If monthly EMA 12 is lost, the needle kicks up a notch. So we're testing all-time highs, and I'm watching crypto stocks. Are crypto stocks going to get rotation? I love equilibriums. Google Chart Guy's equilibriums if you don't know what they are. But BMNR, 2-day time frame. I love this equilibrium. If Bitcoin and Ethereum are getting their rotation to get another leg up, we're going to look for this equilibrium to break bull. BMNR right now, the most important levels for me are our 2-day higher low and our resistance. It's entirely possible if we fail 64 that we just keep tightening up through the first couple weeks of October, but this equilibrium is going to break end of October or early September, early November, and that's going to be something to be paying attention to. We've talked a bit about equilibriums in these videos. The last video I ended by saying, I don't like talking about this penny stock, but this is a top watch, and I'm long ATAI in the psychedelic space. It was a beautiful year-long monthly equilibrium. At that point in time, it was 277 when I did that video. We've now gone up another 100%. Monthly equilibrium, tighter, tighter, tighter. You're just shaking the soda can and you pop it open and we rip. And this one's in hindsight, unfortunately, but BKKT, crypto name, had a beautiful monthly equilibrium that broke bull at 25.68. And look at how quickly, I mean, it's just straight up, but you break 25.68 on the longer term equilibrium resistance, and 3 days later, and there was obviously news and things involved here, but 3 days later, you're up 160%. Obviously, it doesn't happen like that every time, but that's what pressure being released does on these constricting patterns. And so BMNR, 2-day time frame, paying extra attention, coin, crypto name, monthly high or low was just set. I don't want to buy something that's been going straight up for 5 months. I can look at this and know that a monthly high or low is the most likely scenario, and then watch for the signs that it's being set. I'm watching into the next couple of weeks, Riot. Riot had a tight, look at the ranges we're testing. This isn't an equilibrium, but Riot is testing the highest level in 3.5 years. And it's a potential cup and handle type of pattern on the 4-hour. So Riot has my extra attention for things that haven't run hard over the last couple of years and have been trading sideways and are now trying to break out from that. Another equilibrium that we've been tracking in these videos is BA on the 4-month time frame. Boeing, all-time high, low of the CVID dump, lower high, higher low, lower high, higher low. We're approaching resistance. 267.54 is the most important level. If we fail it, last video I talked about, I hope we fail resistance and keep tightening up into 2026. If I'm trading in equilibrium, I want it to get as tight as possible before the break takes place. So I would love for a lower high to keep tightening up and then break, mid 2026. Maybe that happens, maybe it doesn't. But if it's going to happen, step one is we need to lose a healthy monthly chart. Right now we're in monthly consolidation. It's a potential monthly bull flag. Could this be a cup and handle? I mean, you can make the argument. I want to see a break under 200 with earnings coming up. A break under 200 will tell me we're going to keep tightening up for a while. So watching this one for when it breaks. And it's not breaking just yet. Last video we talked about keeping an eye on dividend names. Why? Because when we had rates go up, there was an exodus out of dividend names, because if I can get 4.5% risk-free in treasuries versus 4.5% in a dividend play where, I'm at risk of the stock going up or down, this is the safe haven. And now that rates are dropping, are we going to see capital flow back into dividend plays? And so that was a thesis in terms of, let's pay attention to this. We talked about Walmart. I talked about a position I have in Walmart. Monthly uptrend, bulls in full control, no red flags. Again, it's so simple in hindsight. We've been holding monthly EMA 12 as support for 3 years. Every single time it's tested, it holds and we get another leg up. So many of my long-term positions are just, if we're holding weekly EMA 12, if we're holding monthly EMA 12, I'm not doing anything. As soon as the trade's going in my favor and I've got some profit cushion, it's just let it run if that is holding. And so that's the case for Walmart here, which did just get an all-time high. No real follow-through, but it's still holding on just fine. Some of the other dividend plays we were watching, PG, Procter & Gamble. I said, look at this yearly chart. I'm not comfortable buying this chart where it stands. I want yearly consolidation. We've been holding yearly EMA 12 for 35, 40 years. If I'm going to buy PG, I want it to be in yearly consolidation to look for a yearly higher low, ideally at that EMA 12. And since we checked in 3 months ago, we have weakened. We were testing this key support. We broke it. And so we're close to monthly consolidation yearly consolidation taking place on PG. And we got 3 months left to go. We double topped at the all-time high. We're near the low of last year. So maybe we roll into 2026 and start yearly consolidation, which is what we did in the healthcare sector. And now I'm looking for a healthcare yearly higher low. So we'll talk about that in just a moment. I forgot to talk about Ethereum as well. We'll talk about Ethereum in just a moment. But sticking with dividends, so PG, patiently waiting. You know, again, if we bounce off 152 and head up to 200, whatever, I miss it. Don't care at all. You give me exactly what I'm looking for. You know, give me a weekly oversold at yearly EMA 12. I'm interested. And that's one of the themes in all these videos is be picky. You're in control. These setups need to earn your money. Don't be giving your money away. They need to give you exactly, you're shopping. I've got a shopping list. You know, if I go to the store and I'm looking for a protein bar with 15 grams of protein and I find a junk one that's got 8 grams, I'm not buying it. That's not what I want. Do that with your setups. You are in full control. Utilize that control to get exactly what you want. The setup is going to come to me this way or I'm not going to take it and I don't care. There's 150 other setups that I can be keeping an eye on. IBM was another one that we were looking at. That's a monthly EMA 12 rider as well. This was one where I wanted 3-month consolidation because it's a 3-month stair step. Again, another one that was just a sideways range into an explosion. It didn't come to me the way I wanted. We bounced right off monthly EMA 12 again. Daily oversold, I'm sure. Did we get weekly oversold? No. Stair step drop, that marks the bottom. Just a monthly EMA 12 rider. Not the setup I want. Holding well for the bulls as long as the monthly higher lows keep forming, but I'm not going to have an IBM position anytime soon. Pep. A couple of videos ago, we were talking about Pep. Bearish for the first confirmed 3-month downtrend in this name in decades. We got it. We followed through. The bear break was 155. We dropped down to 127. So almost 20% bear follow through. But then we look for the yearly higher low. We've been riding yearly EMA 12 for 40 years, and we're testing it. And so I've got some Pep exposure. And actually, this one went perfectly. And again, as you're watching the other videos, pull up the chart on one screen, ideally, as you're watching on another screen, because in the last video 3 months ago, Pep had just done this bounce, and I said, watch for a back test of this zone as support for a daily higher low and see if we can confirm the daily uptrend. Perfect back test. Earnings helped this spike up. Daily uptrend confirmed. Just perfection. And so now I've got a position where I'm looking for the yearly higher low. So let's go to the 2-week time frame. If this is going to be a yearly higher low, this has to be a 2-week inverse head and shoulders. Why am I on the 2-week time frame? I never use the 2-week time frame because that's where I have clarity. The monthly and the weekly, not quite as clear. I mean, you can still see it there, but I like to condense things a little bit. And so the 2-week time frame does that for me. We double topped on the bounce high at that resistance. Right up at that zone. And so if the bulls with earnings coming up, if they can form this right shoulder and get over that resistance zone, a yearly higher low is going to be shaping up. And so that's what my position is going for. And we'll see if that continues to play out. But bulls need a bullish reaction to earnings next week to try and set that right shoulder and bottom out here. Definitely trying to build a base of support at 140 with this sideways range. So those are some dividend names that we're watching. PG still patiently waiting for a yearly higher low. Okay, we'll talk about healthcare in just a moment. Let's go back to crypto. I talked in the last video about ETH, the potential we may see a 6-month equilibrium into 2026. We knew we were looking for the 6-month higher low. Bulls just went straight up and said, nope, new all-time high. No follow through, but that's a bull break. We are now, that's a 6-month uptrend. And the monthly chart just went straight up. So we got a monthly stair step. We got a monthly inside bar that just closed. We are back testing and holding previous resistance as support. When we see monthly consolidation, just like the S&P 500 and the NASDAQ, we will be looking for a monthly higher low, but no sign of it. And this is a potential bull flag, 2-week time frame. Looking good. So obviously if Bitcoin heads up to an all-time high, we're going to be looking for ETH to head up towards 5,000 and beyond. And so again, we're watching into October, November. Is crypto, after trading sideways for a month, 6 weeks, is it about to get rotation again? All right. I am in an LLY position as of a couple days ago. I had zero intention of doing so, but all within the span of about 15 minutes, I did long-term technical analysis and saw a setup that I liked, and it was combined with a little bit of fundamentals. Trump talking about a stock certainly isn't hurting. In his second term here, he is telegraphing stock trades, INTC, LAC Lithium. And so he talked about LLY. And as soon as I see LLY shooting up, I look at the long-term time frames. So first off, healthcare. We know we're looking for a healthcare. Yearly higher low is the most likely scenario, eventually. We just confirmed a weekly uptrend to get back to 6-month highs. So we are seeing rotation into healthcare this week, whether or not that lasts or not. When I want to see the rotation, I'm looking at an individual name divided by the ETF or the sector divided by the S&P 500. So if I want to see if Amazon's getting rotation, I look at Amazon divided by QQQ. I could say it's been relatively weak for weeks. It's trying to shift in the short term, but we would need a significant move here for us to say, yeah, there's clearly rotation going into Amazon. And if you just look at Google divided by QQQ, you could see that happen. It was relatively weaker forever, and then the bull move took place, and then it just surged with a massive amount of rotation into Google. So I'm doing that where I'm looking at XLV divided by the S&P 500. Clear rotation this week. If it's going to be meaningful rotation on this weekly chart, we've got to break this high. Just treat it like it's a stock. We got to break that high to get to the strongest that healthcare has been compared to the S&P 500 in 3 months. That would be a significant shift if that can take place. So that's what I'm watching for. So with that, we had UNH as a longer term bottom that we were watching for. We've got a nice bounce. If we're going to be confident that we can follow through significantly, eventually UNH will have to confirm a monthly trend change. But LLY, I just love the confluence of timeframes here. You go to the yearly, okay? Straight up, stair step, still strong. Go to the 3-month. What's the most likely scenario on the 3-month time frame? A higher low. We've been consolidating for over a year. We test 3-month EMA 12. Okay, I want to scout a 3-month higher low. I then pull up the weekly chart and I say, I look back at all this chop, and at first glance, this is choppy, but I zoom in with my laser eyes and I say, wait a second, we haven't confirmed a weekly uptrend since all-time highs. There's been no fake outs. There's been big moves, but we've never confirmed a weekly higher low and higher high since all-time highs. And as I'm saying that to myself, we're trading right here. We just had a big bounce. We're looking for a weekly higher low. Obviously now, we have the first weekly uptrend in over a year. And the 3-month higher low is set. I also pulled up the 2-week chart and I said, if we're going to set a 3-month higher low, what kind of bull pattern would it be? Well, this is a falling wedge. A 2-week falling wedge breaking bull will set a 3-month higher low. So I went from the 3-month chart to the 2-week chart to the weekly chart, and I bought a position all within a 20-minute span. And granted, it was a small position because I was chasing on the short-term time frames. You know, I bought it right here and then posted about it on Twitter right after. So I wish I had twice the size, but just an example of the different time frames aligning. What's the most likely scenario? If the most likely scenario is going to shape up, what kind of pattern would it look like? And then was not expecting that kind of follow through yesterday, but not complaining. So again, right? I don't have to buy NVIDIA at all-time highs. I can buy Eli Lilly, which nobody's wanted for a year because there's rotation going on in an extremely healthy market. So the takeaway from this video is my suggestion that, be looking for the laggards and the things that are more comfortable and the monthly higher lows and the supports are nearby, as opposed to the things that are straight up for the last 5 months. Because there is a good bit of things out there that aren't this extended. One more longer term thing I'm watching, XBI, biotech sector benefiting from healthcare strength. Look at this zone, support zone. We pulled back just above it a few months ago, and we're coming up on our resistance wall. We're 2% away from testing the highest levels that we've seen in 3.5 years. We're a little bit extended. We're not too extended. The weekly RSI is only just getting 70. The daily RSI is only just getting 70. Daily EMA 12 rider. So I'm watching to see, do we reject? I mean, in my ideal world, I don't have a biotech position right now. I was choosing between XBI and IWM, and I chose IWM, which has gone up, but XBI was a better choice in hindsight. I would love a rejection initially into a weekly bull flag. And then I would buy a weekly bull flag. I would say that's either the weekly high or low or I'm wrong. And then ideally we rock it up and break all that resistance to 3.5 year highs. But I'm not going to buy a break if it happens from here. And I've been benefiting in the psychedelic names because a strong biotech sector helps the psychedelic sector. But I'd like a resistance rejection to be able to buy a bull flag in XBI. Again, if we go straight through it, whatever, don't care, see ya. Reject, give me a bull flag. All right, I'm interested. Let's see if I can set up a trade that I like and get that risk and reward that's favorable. All right, that's all I've got written down. So again, just to summarize, we did a lot of checking in on things that we've been watching along the way. We've got EMA riders on gold weekly, silver monthly, Bitcoin monthly. We've got BA equilibrium still tightening up. That break's going to be a good one whenever it happens. We've got BMNR, crypto, Ethereum stock in a 2-day equilibrium over the last couple of months. That's going to break probably before BA does. And we've got healthcare. Is healthcare forming the yearly higher low? Is PepsiCo, PEP, is it forming the yearly higher low? 2-week inverse head and shoulders would need to shape up. All right, I'm now reading the chat room and skipping the questions that are not relevant to this stream. Thanks for trying. Binance is a blue sky breakout altcoin. Again, you're just walking up a stop. So weekly is a stair-step pattern. We've been going straight up for 10 weeks in a row. We know when we pull back on the weekly next, we're likely to form a weekly higher low is the most likely scenario. Just keep walking up a stop. If you, at this point, it's a late entry, 1,000, you're in at 1020, that's pretty late, obviously. But, set a stop it, break even or 999, see if you can get some more wiggle room, take some profit to lower your cost basis. If we get a move up to 1150, sell a little. Now your break even's under 1,000. I mean, ideally you get your break even under 932 and stick a stop under there. All right, cannabis. So cannabis charts aren't good for long-term time frames just because they're coming off the low. And we know it's all news related at this point. Eventually we got to confirm a monthly uptrend like we did back here. This was a monthly uptrend. But we're coming straight off the lows. Whenever we top out, we'll need a monthly higher low and higher high. But there's no real patterns or setup at this point. We've got a nice bounce underway. Bulls are hanging on, and we're just waiting for news. So it's not really a good long-term pattern kind of setup. If we were to bounce up towards $11, God willing, and reject. Then we look for a monthly inverse head and shoulders, but there's not much analysis to do on the long-term timeframes coming off of all-time lows. And GTBIF is the same. So, okay, good question. Can I explain why I expect rotation into crypto in October? Well, number one, it's one day underway and it's happening in one day. But it's not necessarily that I expect it. Step one is come up with a thesis and then look for the clues that you're right or you're wrong. I'm looking for rotation. What do I want to see if I'm going to see crypto rotation? I want a Bitcoin weekly equilibrium bull break. Check mark, we got it. I want metals to top out. Pulled back today, held on just fine. Bears have a lot of work to do if that's going to happen. But that would be another check mark if gold convincingly starts weekly consolidation. Crypto stocks have had some relative strength. Riot and CLSK last couple of weeks. Coin today. That's a little clue for the potential of rotation. So again, it's, I come up with a thesis. It can be 50-50 when I start my thesis. There's a 50% chance we see rotation into crypto. Bitcoin breaks the weekly equilibrium bull, 65% chance we're getting rotation into crypto. Strength in crypto stocks, 75. Again, it's just these little clues that shift my probability needle and tell me if I'm right or wrong. And so, CRCL, my thesis was a monthly higher low. I grab a position on this monster green day. I sell some partial into profit, but I know it's a long way to go. I think we're forming a monthly higher low, but I don't have high conviction. 2-day time frame just confirmed a 2-day uptrend. That confirms my thesis, but I had to wait for the information. I can come up with a thesis. I can position in a low risk spot where if I'm right, I make 5 times. If I'm wrong, I lose 1. If I'm right, I make 5. Like, that's the name of the game. And then it's just looking for the clues. And so we've got some good clues to start October. I would be shocked, for Bitcoin to get in this market environment, which is euphoria, for Bitcoin to get 4% from all-time highs and then fail and head back under 100,000, I'd be shocked. That is the less likely scenario by a long shot. It can happen, but the most likely scenario is all-time highs. Thanks, Gary. Tilray, again, cannabis on the long-term timeframes are not great. We've got a nice monthly bounce underway. When's the last time TLRY has confirmed a monthly uptrend? Your answer is it has not happened in 5 years. So it has to happen for the first time in 5 years. We haven't topped out yet. It's a monthly stair-step bounce. Whenever we top out, whether it's now or $3, who knows? But we then have to confirm the monthly uptrend for us to say something is different for the first time in 5 years. As of right now, this bounce that we're seeing, it's not different than this. It's not very different than this. That's 100% plus bounce. This one's more significant, 400% or whatever. But prove to us that it's different. Do something different than the last time. A monthly trend change would be different. That has to happen. We had been rejecting from monthly EMA 12 resistance 1, 2, 3, 4, 5 times. Start holding it. Next time we test monthly EMA 12, hold it and see continuation. Show us resistance turning into support. SBET, the equilibrium wasn't as good. It wasn't as clear as BMNR. And it actually broke bear. It broke bear. So huge surge up, big pullback, bad drawing. Lower high, higher low, lower high, higher low, bear break. So it did already break bear. Doesn't mean it can't recover, but if you let's just go BMNR divided by SBET, which name is stronger? Daily chart, BMNR has been outperforming SBET for 2.5 months. There's little periods in here. SBET outperforms here, it outperforms here, but the trend, let's go back to 2-day time frame, it's a clear uptrend. So until this turns in, if we do this, then that means SBET over BMNR. But let's just keep it simple. If BMNR divided by SBET on the 2-day time frame is holding EMA 12, that means BMNR is a better long than SBET. If we lose it, that can change. But keep it simple. If that's holding, BMNR over SBET. UPS. Crushed. Let's go yearly. Ugh. Gross. So why do I not like this chart? Because a yearly lower high is the most likely result of the next bounce with the size of that pullback. We have a clear support here at 82, which is trying to be defended. But this is, in terms of major stocks, this is one of the most bearish charts you can find. You're not going to find many things that have been pulling back for years and that are down 50%. I mean, what are we, down 70% from the high? So again, I'm not saying we can't bounce. It's just if I'm looking to 65%, if I'm looking to get in on a name, I want it to be ideally still in a strong uptrend, and I'm just getting it on a longer term higher low. This isn't a longer term higher low. We got a 3-month stair step here, which means a lower high every single candle, 9 candles in a row, which is 27 months worth of price action. Monthly chart. My simple statement looking at this would be, if monthly EMA 12 is resistance, the bears have complete control. We've rejected 10 times on the way down. So again, if I want to look long, okay, there's a level, there's 82 to play off of. But rather than try and nail a bottom on a very bearish name, I would rather wait, just like ATAI. Psychedelic name. When did I buy it? I didn't buy it at support. I bought it when it was still within its equilibrium, but at that point in time, we were 100% off the all-time low. I want the momentum at my back. I want to be profitable in my trade as soon as possible, right out of the gate, to be comfortable and in full control. So, and I know, if people find value fundamentally and they're scaling in at certain levels, that's just so foreign to my style. I would rather give up 10% of a move if I know that when I get in, it's going to keep going and I'm going to be profitable right away versus trying to nail a bottom in weakness. So that would be my approach on UPS. You're either, trying to play off 82 and sticking to stop under 80 if you really want to try, or you're just patiently waiting for the bulls to prove to us to earn our money. Prove to me, UPS bulls, that you deserve my money because the longs are shifting things. Because right now, there's nothing on this chart. I mean, a double bottom at 82. You got a tiny little something. But bulls are not proving enough to me to earn my money. IREN has been a monster. It's not a cup and handle. Okay, maybe. I see what you're looking at. On something that's just been running this hard, I like to look for a cup and handle on something like, silver when it's trying to break out. Now I got to find it. I forget where it was. I like a cup and handle on something. eBay had one, I think. On something that's trying to break out from major levels. You know, we reject from resistance. It's been a ton of churning, a ton of consolidating. We bull flag, and then we stop everybody out on those tops. eBay cup and handle was probably in one of these longer term videos a couple of videos ago. But, you know, IREN doesn't need a cup and handle. It's been ripping and insane. Just stick with the daily uptrend. Daily EMA 12 rider. We've been holding daily EMA 12 for 2 months. If that's support, bulls are in full control. You know, should I anticipate we're about to rip higher? You just stick with the higher lows. We've been going straight up. We're going to top out, right? We know we're going to top out here eventually. We're going to see weekly consolidation. We just ran up 200% with no weekly consolidation. That's coming very soon. So prepare yourself. When we lose daily EMA 12, weekly consolidation will be shaping up and very likely be underway. And if you want to be walking up a stop and not sit through weekly consolidation, daily EMA 12 or the higher lows are your guide, one or the other. You know, sometimes I'll stick with the higher lows, and sometimes you can get an earlier signal. Meaning, you know, if we lose daily EMA 12, but we're still above 39.70, maybe I want to act on that because it hasn't happened in 2 months, and maybe I can exit 10% before we lose the daily higher low. I also know I'll be interested in an IREN weekly higher low at some point. But again, anything that's gone straight up like this to this degree, quantum, whatever it is, you know, we got some quantum names straight up on the monthly, 400 something percent in the last 6 months. You got IREN up 200% straight up on the weekly. Just always keep in the back of your mind, we're going to see weekly consolidation. It's coming pretty soon. Doesn't mean try and short it. Just means if you're long, are you going to sit through that consolidation, or are you going to try and walk up a stop to ensure that you stop out before it happens? I wouldn't call ABT, well, let me look at the time frames. No, I wouldn't call ABT a cup and handle. I don't know what time frame you're looking at, number one. If you're looking at the monthly, it's not a cup and handle because the right side cannot be higher than the left. It's so important, you know, people don't look at the definition of a cup and handle. Criteria 1, right side is lower than the left. And so many of them aren't that people highlight as cup and handles. Even big accounts. There are big trend spider accounts on Twitter. It's like, what? That's not, like, what are you doing? That's not a cup and, that's not even close to a cup and handle. How are you posting that? Anyways, the whole psychology behind the pattern is you fail resistance. And when you fail resistance, another wave of shorts plays off that level. And then when you break it, you have this combination of shorts stopping out and longs triggering in that leads to monster follow through. So criteria 1, is the right side lower than the left? If no, it's not a cup and handle. So now let's just go to the weekly equal or the 2-week equilibrium. Classic. Low, high, higher low, lower high, higher low, lower high. So draw your ranges. We are just ping-ponging. We've got a base of support. We've got a wall of resistance. Nothing changes until, again, just the analogy I always give is you're in World War I trench warfare. You've got Team Bear, you've got Team Bull. And every time Team Bull attacks, they're repelled. And then Team Bear attacks and they're repelled. And Team Bull attacks and they're repelled. Each side is pushing the other side back every time they get to the trench. Soon, someone's going to overrun the trench and make it theirs. So this was a trench, right? A resistance trench. And there's a battle, and the bears repel the attack, and they repel the attack, and they get overrun. And now it's the bulls' trench. Now they've got multiple trenches, and they're defending their captured trench. That's why resistance turns into support. And so the bulls have favor because we're in a longer term uptrend, but it's a battle. We're just battling for these two zones. And one side has to convincingly overrun the other side's trench and turn it into theirs. The fake out is when you overrun the trench and then give it right back. Trench. LAC. Ripped off the low. So $2 was the base. We built another base in the low $2. So I would, you could call this a monthly uptrend. Now we're battling this trench. Look at that rejection. We top out at 765, 771. We top out at 755. It's right there. So that's the next hurdle. Could this be a cup and handle? I'm viewing this as a 4-hour equilibrium. We've been following this one in our chat room. I'm just viewing it like this. We're scouting the 4-hour higher low. Again, trenches. Need to change the title of this stream. There's your trench. There's your trench. Hold support, reject, reject. We're looking for a new higher low to try and form here to keep tightening up on the 4-hour, and then that 4-hour range is going to break next week. Bulls are hoping for a green day tomorrow to set the 4-hour higher low into next week, but they still have to prove it. Good morning. Oh man, tough name. Kinder. Gramay? Melbourne? Australian name? Grammy? Grammy? Gramay? I don't know. But hey. Yeah, Pep's going to be up to earnings. Got to form that 2-week right shoulder. Thanks for moderating. Tilray, what happened today? Guess what? We were repelled from the trench. I was a seller. I sold at 182. And then I rebought it at 162. Why did I sell at 182 today and rebuy 162? Because we ran up to resistance. Here's more analogy. Team Bull is running to the bear trench, and they are tired. They have been sprinting for 2 miles to get to the trench. We were overbought on the hourly. This was a super stack. We have an alert, the super stack, which tells us when you're at extremes on a bunch of time frames. The hourly super stack fired right under resistance, and it's an extended hours resistance level. The highest level we hit last week was 191. But as we're sprinting towards the trench, we are completely out of breath. We've used up all of our energy just to get there, and now we got to fight for it. We're not going to win. So the hourly super stack means the RSI is, up in the upper 70s at least on the hourly, the 15-minute, the 5-minute, the 2-minute, the 30-minute, all at the same time. So you are as gassed as you can be. And I rebought it at support just because my mindset is, okay, I just locked in profit. I can reload it 12% cheaper at support. I'll just set a break-even stop. My break-even stop is 154 on this position now, which is a bit under the trench. And if we hold the trench, I'm going to have another great position. And if we don't, I won't lose anything. But we were too extended into the resistance test. Bulls used up all their momentum and buying power just to get there. It is tough out there. So JN has struggled this quarter. Social media, I'm so glad that I didn't have Twitter like it is today when I was starting to trade, because it's not real. It's such a selective bias of information that you're getting, and myself as well. And I do my best to show losers. I'll post when I stop out at the bottom just to show you it happens. Obviously I want to post my winners more, but it's not real. It's not reality. There's a bias in what is shown. And so you're seeing everybody posting their huge wins and their big gains. And, the people that are having the biggest gains in this market, the majority of them will have the biggest drawdowns next bear market. That's a fact. So, they're going extremely aggressive long, and it's working because we're in the right market environment. And the really good ones will keep their profits, but the majority won't. So don't let that get you down. And I know that's hard because it's easy. And just to be blunt, most people are making money right now. Whatever you're doing isn't working. You're either trying to short, you got some kind of bias going on, probably fundamental. I don't know, obviously, but this sun is brutal. Yeah, I don't, you got to be journaling. You got to be reviewing your trades. You got to be figuring out what you're doing wrong and remedy it. I've made every single mistake that you can possibly make as a trader. And the reason I'm a good trader is because I learn and I don't repeat them. So that's what you got to do is, you got to look yourself in the mirror. What are you doing wrong? Figure it out first by looking at your results. I just had an epiphany recently. I looked, my worst month this year is May. It's like, that was a bad month. And I look back last year. I had a red May last year, 2024. I look back, I've had 4 bad Mays in a row. Why? Spring. May is when I'm pumped to be in the yard. I don't want to be on the computer screen. I'm planting seeds. I'm prepping garden beds. And it's like when I'm most pumped to be alive is May. And it's clearly showing in my trading results. And so I can't believe it's taken me 4 years to realize it. But now I know May 2026, I'm going to be trading with half position sizes. There's no chance I'm doing that again. But you got to review your stuff to figure out what's going wrong. There's nothing to look at on CGC. I'm sorry. It's just junk. Maybe it'll go up with the sector if the sector goes up, but it keeps retracing the more of its move than everybody else. It's a dilution machine. Like, how am I supposed to do analysis on this monthly chart? Like, there literally doesn't exist a more bearish chart in markets. It's in the top 0.5% of most bearish charts in the entire stock market. We just got to face reality. That's the truth. CGC is one of my most profitable long stocks I've ever traded in my life, thanks to this. There's a special place in my heart for it, but I got to call it like it is. It's as ugly and bearish as you can get. There's just so many better choices. Look at TLRY divided by CGC. Where should my money be? TLRY has been outperforming CGC for 4 months in a row. And any cannabis stock that you measure against CGC is going to be doing that. It can change, but again, I'm not going to buy something and hope for the pattern to change. I have to see that the pattern is changing and then react to it. Bob, I got a nice laggard move. I missed this one. I was stalking it and I missed it. It was the weekly equilibrium. Look at this long-term equilibrium. Monster bull move. Gave back a bunch. Lower high. Higher low. Lower high but sideways. Go. The bull break signal. And again, you're waiting. Like, if you're waiting for the bull break, a late one was 132. And then we go up 50%. So it's late, but it's showing you the direction. It's showing you the momentum is there. And then it's up 50% in 5 weeks. And that, what's my biggest miss on something I was stalking for this year? It's probably Baba. But long term, it's looked great. Monthly uptrend confirmed even before that. But be cautious, 6-month time frame. Are we going to form a 6-month lower high compared to all-time highs? Certainly on the table, just because, we're so far. 3-month, we're still real far away. Really, it's just a question of when does the broader market top? Can the broader market stay strong long enough for Baba to keep working its way up? Or does the broader market top and give Baba a long-term lower high, and then we just do this for 3 years? I don't know. But bulls still have the momentum there, obviously. Weekly stair step. Yeah, definitely stretched. Again, same thing. Anything that's gone straight up on the weekly like this, we know weekly consolidation's coming. Just got to remind yourself that. But again, daily MA12. If you're holding it, nothing to worry about. We talked about UNH. Quantum, I'm looking short on Quantum. I don't suggest anybody short it. Shorting blue sky breakouts is extremely difficult. I'm having a lot of fun doing it. Again, 15 years experience. Last week, shorting Quantum made my month. Bulls are in full control. Great day today, no doubt about it. I'm just watching for, same thing. I'm just looking for weekly consolidation. I'm looking for a temporary top to euphoria into weekly consolidation. But there is no sign of it at the moment. If we're red tomorrow, I'll be watching for the possibility of a bull flag, no follow through. Flags with no follow through often indicate an exhaustion top or bottom. But again, there's no sign of it. Bulls are in full control. Daily MA12, keep it simple. I'm long IONQ. Still got a long IONQ swing, and I'm just balancing that out by looking short for day trades. I traded RGTI like 8 times today, and it was just monster move up. I got some of this short. I got that higher low. I got that short. I stopped out that short. We'll still get it. Give me a gap up tomorrow, and I'll short it again. But again, I don't suggest anybody else do that unless you got very significant experience, because rewind 5 years ago and me shorting this name would be getting myself into trouble without a doubt. Okay, so Matt is asking, he would like to start making hundreds of dollars a week or even a day. What stocks move fast enough to be able to do that? Step 1, you will not be able to do that unless you put in thousands of hours. I'm not sugarcoating it, right? I could be right now telling you, I can make you a day trader. Sign up for my course, sign up for my chat room, and I've made Jungle Funk Joey a full-time trader. I can be lying to you to get your money, or I can tell you the truth. It's literal. Literally thousands of hours are required for you to have any chance at being consistently profitable short-term trading. And one of my edges as a trader is there was a period of 7 years where, again, literally I was in the top 0.1% of people putting in hours a day trading. How do I know that? Because it physically is not possible to be putting in more. A few sickos were, but not many. You couldn't have a wife or a long-term girlfriend and be doing it. You couldn't have a kid and be doing it. You couldn't have a job and be doing it. I was putting in 12 to 16 hours a day. And you just can't beat that. So if you have that time, get obsessed, get at it. But unless you are in an obsession phase where you're putting in a dozen hours every single day, you shouldn't have an expectation to be able to consistently make profit on a daily basis. Because I put in 10,000 hours, I sit down at the computer and I'm 80% sure that I'm going to make money today. It's 70% looking at my trade results, but in my head, it's 80%. So with that being the premise, the stocks, Tesla's my go-to. I can use Tesla, size, liquidity, market in and out, and then it's just jumping around. I've been trading quantum all year. These quantum names have great volatility in both directions, like I just told you. 8 trades on quantum. I mean, I had like 22 orders because I'm buying, I'm sell half, sell half. I had like 22 orders on RGTI today. So you just go to the volume and liquidity. Oh, TLRY is trading $500 million and going up 60%. I traded that and I stopped watching quantum that day. But Tesla has the most consistent volatility, liquidity, and dollar volume. If nothing's going on, I'm going to Tesla. But the money rotates around. Quantum, uranium, crypto stocks. It's just following it. All right, just a few more here. Government shutdown. You'll note that I haven't said one word about government shutdown in any of my videos. Why? Because SPY has gone up 6 government shutdowns in a row. It's literally a non-event. Just stick with price action. Government shutdown is absolutely meaningless to this stock market, as it has been year after year after year. Look at history. We've got history as our guide. It's not like it's something new and scary. And even before it happened, the market was pricing in like an 85% chance the government was going to shut down. Yeah, ABAT was a good one. Tightening range. Again, look at this. 411, 389. You get over that. And bulls followed through in a big way. Obviously, headline related. Look at this back test. Look at this. That's our top. Look at this. To the penny. You come back, you kiss it, and then you keep going. Oh, I missed it. There's your second chance. Daily bull flag. We hold it. The next day we hold it by a few pennies. Perfection. What's up, D-Pilot? Jets. We were watching Jets in these long-term videos. Go back, watch 3 or 4 ago because we had an equilibrium that broke. It was a 3-month equilibrium. It broke bull. Boom, 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 boom. Bull break. Not a ton of follow through, but bull break was 21.38. We go up to 27. That's plenty. What, 25, 30%? Now we're probably in a 6-month equilibrium. No. Clear resistance. If we reject here, we'll look for a pullback and a monthly higher low, but the equilibrium bull break was last year, I think. Yeah, end of last year. Too late to get into Baba. Again, make it come to you. Be as picky as you want. I cannot buy this weekly chart with the weekly RSI over 80 and think it's good risk reward. Pull back and a weekly higher low is the most likely scenario. And so then I scout for a weekly higher low entry. Thanks, Dragon Man. Tesla's testing all-time highs. Hard rejection today. Again, another one that's just been running real hard. Weekly, definitely will be looking for a higher low. Still a daily uptrend. Again, that's another one. Give me a rejection and a weekly bull flag to try and shape up a cup and handle there. No sign of tops aside from euphoria, and that's not enough. Dollar. Dollar's battling this weekly EMA 12 for months and months and months. We closed right on it last week. We're right under it right now. Again, that's just been my guide. Just like I'm bullish gold if weekly EMA 12. I've been saying the exact opposite. I am bearish the dollar if weekly EMA 12 is resistance. And we're battling it right now. If we get over it, then the bulls must confirm the first weekly uptrend in a while if things are going to shift. Definitely worth paying attention now. You know, is this a monthly bear flag that confirmed with zero follow through to show bear exhaustion? Maybe. Definitely paying more attention now to a potential dollar bottom than I have in the last bunch of months. Look at this perfect support as rejection. This is where Lamont's volume profile, chart guys Lamont, where I use more than I used to, just such a clear support zone, rejecting as resistance. Look at MSTR. Look at this 358 level. Support, support, hold it, reject, reject, key test coming, maybe tomorrow. 358 is the level for MSTR. All right, I appreciate you all watching. Thanks for the likes. 156, that's pretty good without me needing to get mad at you. Establish your game plans. Get picky. Make the chart earn your money. Set out exactly how you want the setup to come to you, and if it does, you take the trade, and if you don't, you move on. Baba, too extended. I'll scout a weekly higher low. Tesla, I'll scout a weekly higher low. IREN, I'll scout a weekly higher low. Quantum, you can scout a weekly higher low. But we're not consolidating on the weekly yet on any of them, so you got to be patient. Watch the other ones. Again, we're reposting the links. We got the enter your email to get the summary of this video, plus some ebooks and stuff. We got the YouTube playlist of the other 9 long-term pattern videos. And what I said about needing to put in thousands of hours, that's to be a day trader. If you want to be able to monitor your investments or long-term swing trade on long-term time frames, it's hundreds of hours. It's much more manageable. That's a much more realistic goal. I'm not going to say you can't be a day trader because I did it, but I was obsessed and I put in thousands of hours. If you can put in thousands of hours, maybe you can do it too. If you can't put in thousands of hours, you have no chance. Love ya. See ya. Have a good Friday. Turkey.